Azalea from GCA Help, and I would like to welcome you to the first ever GCA Forum presented in Zoom. And so there's going to be a couple of things that are going to change due to the format. This forum is going to be recorded so we can upload it later to our website. And the other thing too is for questions. We would all like you to use the chat feature. Cheryl will be monitoring it. And so as we go through each of the segments, feel free to shoot your question through. And then at the end of each segment, we're going to go through the chat and review the questions and answer them. All right, thank you. Okay, so as you can see, we have a pretty good agenda for you today. Some of them are going to be about some process changes and some topics that have come up recently within GCA Help. So we're going to kick it off with the post-award fiscal compliance team. Matt and Andra, take it away.
All right, thanks, Azalea. This will be about a minute here. Just a quick reminder, we've been talking about this at MRAM and elsewhere, but we just wanted to get the word out. The federal government has issued a number of flexibilities around COVID. If your research has been impacted by COVID, the federal government has allowed individual federal agencies to provide some flexibilities to you, flexibilities being a nice broad and somewhat vague term, but it's up to each individual federal agency to determine what flexibilities, if any, they want to apply. So please review your award, review your individual federal agency guidelines to see what they have done. If your research has been impacted by COVID, please talk to your sponsor. And the biggest thing there is please document that. Document those conversations, document any expenses that are related to COVID or anything else. Unfortunately, audits happen, and not only that, they tend to happen in 3 or 5 years. So we want to make sure that everything's fully documented before the auditors come along in a couple of years. Of course, if you're working on research that's not federally funded, you need to check with those individual sponsors to see what guidelines they have. Matt and I have a lot of information on the webpage there. That link is there. And of course, we are available to help you. So if you have any trouble or questions or confusion about that, please let us know. And that's all I have. Thank you.
Thanks, Andra. Okay, so next up, I'm going to speak about some reporting process changes that we made here in GCA. So the first one is we are now putting the reports for multi-year awards that require separate year accountability on the sub-budgets. So those of you that have American Heart Association as a sponsor or Simons Foundation, this is going to affect you quite a bit. The change is effective 4/1, so if you have any awards prior to that, they're still going to be on the parent, but anyone that received award after 4/1, you should see the change now. So you'll see the reports under each sub-budget. All right, so the next process change is a really big one. So we were able to automate 2 interim reports. The SF425, which is a federal financial report format, and our UW ROE, which is the report of expenditures. What's really great is instead of these being a manual process, we are able to pull information from our systems to populate the report. So this is going to save us a lot of time, but more importantly, it's going to result in more accurate reports. So we do want to shout out for those of you that have reports or sponsors that require a certain percentage of cost share that needs to be met every quarter. Please submit your cost share a month before the report is due to allow GCA time to enter that in the system. So for example, say you have a Q1 report covering the months of January through March, and it's due in April, we please ask you to submit that cost share no later than March 31st. If you submit your cost share and we've already sent the report, we're not going to revise it. Obviously, the cost share will show up on the next report that we do. However, if you find out that because you're not meeting your cost share requirement, this is impacting your award, you need to let us know, because these types of communications tend to go from your grants manager to the PI, maybe sometimes OSP, but rarely GCA. We rarely see this. So you need to let us know, because we may need to work with you to make sure that you meet that cost share before we submit the report, and thus your report can't go through the auto process. I just want to clarify that the automated reports doesn't mean that we automatically submit it to the sponsor. The submission process is going to be the same. So if you need to submit it with the PI's progress report, we will still have you do that. Either way, if you submit or we submit, we will send you a grant tracker notification letting you know. And just please make sure that your campus contact information in grant tracker is accurate, because you will not get the notification, and the default contact person would be the PI of the budget. All right, does anyone have any questions?
No questions in the chat room.
All right, thank you, Cheryl. All right, next up is Michelle, who's going to talk about surplus budgets and the surplus transfer process.
Hi, so this is Michelle, and so to quickly go over a surplus budget, if the university is allowed to retain the unexpended funds on an award, you'll usually see this as fixed price agreements or clinical trials. We'll transfer the unexpended funds into what we call a fixed price surplus budget at closeout. And a thing to note about surplus budgets is that these are under the direction of the department head. So even though these awards are given to individual PIs, the funds do not belong to the PI. So for example, if the PI were to leave the university, the funds would still remain at the UW. So using your surplus funds, what can you use these for? These are not like discretionary funds. You can't do whatever you want with them. They should still support the research that the awards were intended for, and the expenditures need to comply with the forecast principles, which I've listed there. They need to be reasonable, allocable, consistently treated, and allowable. So some examples of charges would be research personnel salary fringe, conference travel costs, lab supplies or equipment, and you can also use the funds to cover deficits on other awards. So let's say your award is closing out, you get to keep the funds, but you don't have a surplus budget. So what you would do is you would fill out what we call a fixed price surplus form and send it to GCA Help. And it's a pretty basic form. You just need to indicate what you want to call the surplus budget, the OR code, and who will be managing the budget. And by managing the budget, we don't mean like an actual name of a person, but their position title, like chair, dean, or director. And you would also indicate which award budget is being closed out. So then after we establish the surplus budget, we can proceed with the surplus transfer process. So there are two ways to go about requesting a surplus transfer depending on how much you have left at the end of the award. So if your unexpended balance is 25% or less of the total funds you receive from the sponsor, it's pretty simple. You just need to provide us with the surplus budget number to use, and we will move forward with the surplus transfer. And if your unexpended balance is more than 25%, we do require a little bit more from you. So until a few months ago, our process was to have you request a surplus transfer pack from OSP, and you would basically provide them with a reason why you had more than 25% in funds remaining, as well as how you would use the funds. And now instead of going through OSP, you will give all that information to GCA directly. So I've listed out the information we need from you, the statement certifying that all the project deliverables were completed, statement detailing why the remaining balance is greater than 25%, of the total receipt, as well as the surplus budget you'd like the balance transferred to. And another thing about this is that we have received a few requests where we saw that there was $0 in expenditures on the award budget. So before you send us your request, if you can make sure that all your project expenditures have been allocated to the budget, that would be great. Otherwise, we cannot proceed with the surplus transfer. And my final point is on the award budget S&A rate versus the surplus budget S&A rate. So the award budget rate and the surplus budget rate might not always align, and that's because we will not create a surplus budget for every award being closed out. So what we would do is if the award balance is between $25 to $1,000, GCA will transfer the surplus to the surplus budget with the nearest S&A rate. And if you don't have a budget, then we will create a new one for you. If your balance is over 1,000, we will either transfer it to the surplus budget with the nearest S&A, or we will transfer it to a new surplus budget if there's no existing surplus, or if your nearest surplus budget has like more than 10% variance in S&A rate. And I've listed some resources for some additional reading if you're interested. Just a quick overview on the fixed price surplus budget process, as well as a link to the form, and then also to the 4 cost principles. And that's all I have. Do you have any questions?
There may be a question. Hold on.
Let's see.
So we do have a question about the initial balance from any budget of at least $1,000 in order to set up a new budget. And the answer, so the question is that true? And then Michelle, I think you did address that.
Yes.
Do you want to confirm? Or could you set up a new one for a smaller sum that maybe was going to another department?
Let me see.
And while you're looking that up, I'm going to say there's another question where NIH doesn't typically let us keep the surplus. Is that correct?
Not for NIH.
And I would say that
no.
NIH, the only time that we would get to keep a surplus is if it's one of the contracts and not the typical letter of credit one.
So for that first question about setting up the surplus budget, if you don't have an existing surplus budget, then we will set up a new one for you.
And I think the question's about the limit, and I think that the slide there is like if the balance that's left over is under 1,000, we are less likely to set it up. We're going to go with whatever is the closest rate. So I think that, and then over 1,000, we would consider, we would look, you know, if there's not a rate that's close, then we would ask you. Yeah.
So if your balance is 100 and you have no surplus budget, then we would create a new surplus budget for you.
Okay, yeah, and so sometimes these are kind of odd, you know, Laura's pointing out, like if you have like $100 left over and you don't even have a surplus budget, their solution is to give it to another department that has a surplus budget. And maybe that makes sense. In some ways, you guys maybe have an arrangement like that. One thing I can say too is that if you have like, I'll use the gates because I think they're kind of a good example where you know you're going to get a series of awards, or you think you might get a series of awards. It might be worth setting something up, even though it might be less than $1,000. That is something that we take into consideration. And I think if you have some specific questions about that, I would say send an email to GCA Help, because we will be happy to look into any of those kind of questions.
Okay, so if we're ready to move on to the next topic, I'm Susan Wilbanks, and I'm going to talk a little bit about how we process termination notices, and particularly how we time the our part of the process as business official where we are certifying. What we want to do is to not do these certifications until all of the stipend payments have posted and the appointment is over. Because since our role is, we're confirming that we have paid the trainee or fellow what we told the NIH we would, we really don't want to do that until all the payments are there in the system, because then we can say, yes, that is correct. We have met this requirement. So if you had a trainee whose appointment was ending on June 30th, we would review and certify their termination notice, assuming that the trainee and the PI had completed their piece. We would certify that in July after that final June payroll has posted, just so we can be confirming what actually happened. So next slide. But on rare occasions, we have a case where a fellow or trainee needs to have their termination notice certified before an appointment ends so they can maintain continuous funding. One example that we've seen lately is a fellow who is currently on a fellowship, and they're given a K award that's, starting in, say, the next month, and NIH can't finish issuing the new award until their existing appointment is completely closed out. So if we were to wait until the payroll had all posted, that stipend had all posted, it would cause a break in funding, and we don't want to do that. So when that happens, we've set up an exception process to allow us to both help these fellows and trainees maintain their funding without a break in funding, and to make sure that we're meeting our fiscal review requirement. And we ask that you notify us as soon as you learn that a trainee or fellow in your department will need to have a termination notice certified before the payments are posted. And when we get that, we review the payments to date. We compare it against the statement of appointment and what they should be receiving, and make sure that they are on target so far. And if we see any issues, we will notify you and say, here's the difference, here's what needs to be corrected. And then once you've made those corrections, then we can do our part of the certification in the X-Train system. And then we present a follow-up review. We complete a follow-up review once all the stipend payments have posted, and we notify the department of any issues, and your commitment in this case is that you will correct those issues even though the termination notice has already gone through. So do we have any questions?
We do not.
Okay. So next I'm going to talk about questions we get sometimes about the award amount versus the cash received for budgets. Usually this takes the form of someone giving us a call or sending us an email and saying, hey, we just got this check and I can't see anything in my SD. The award amount didn't go up. There's nothing in revenue. What's happening? And the issue there is that my SD is not where sponsor payments are tracked. They're just not going to have an impact on the budget or award amount there. And sponsor payments do not impact the award or revenue amounts, with some rare exceptions that we'll talk about at the end. So what does that award amount mean if it doesn't mean, say, if you have an award amount of $10,000, what does it mean if we don't actually have $10,000 sitting in our bank account for that award? It's instead about the contract. It's what the sponsor has contractually agreed to pay UW. The funding awarded in your notice of award, or the not to exceed amount. And it reflects the maximum amount that the PI currently has authorization to spend. So it's more like a credit limit in that way than a bank account balance. It's not saying how much cash we have, it's saying how much the sponsor will pay us. If you do see the award amount changing, what that means is that the contract has changed. The sponsor has provided a supplement or deobligation. It's not actually a cash transaction. So, okay, but the cash is somewhere, right? Where is the cash? Grant tracker. Our system displays both the award amount and the payments received, two different line items. And the invoice and receipt detail will be there if yours is an invoiced award, and also drawdown information if it's a federal letter of credit award. So we've got some examples. This is an invoiced budget, and you can see in purple is the award amount. That's what the sponsor has committed, that they will pay up to $325,753, depending on the activity and how we invoice them. And then in yellow, you see the invoice amount. That's what GCA has invoiced. I believe this is a cost reimbursable budget, so that would be probably in accordance with the expenditures up to the end of the prior month. The receipt amount is what we've actually gotten from the sponsor, the invoices that have been paid. And the open amount reflects, in this case, probably the most recent invoice where we're still waiting to receive payment. And then if you scroll down on that budget information page, you can see more detail about the invoices and receipts. Just looking at the invoice section, you see there's a few little color-coded boxes. This one has an invoice that was voided. That orange V indicates that. And that's useful to know because in case the sponsor might have already received that invoice, or you will know not to send that particular invoice out. We also have indicators for a final invoice or a revised final, and for an internal invoice. And if you see that internal invoice indicator, that tells you that the actual invoice that's sent out is not the same format that you can get if you were to click on the hyperlink for the invoice number. It's probably a case where the sponsor has a special format that we're following. And then the receipt shows you, which payments we've received, and you can see a little detail there. You can see the date those payments come in, the amount of payment, and which invoice it corresponds to. And then with letter of credit budgets, and this is a relatively recent change. So if you've been at UW for a while, I'm sure you'll remember when you couldn't get this information or this level of information. You see the award amount, which is pretty much the same as what you see in an invoiceable budget. That's the amount the sponsor has committed to. And then instead of receipts, you see drawn. And that means the amount that we've drawn down from the federal government from the letter of credit for this award. And in this case, see there's a separate section of total period to date financial information. What that means is this is an award that has a multi-year budget period, a multi-year award period with a separate budget for each year. And in this case, this is one of the later years of this award. So the financial information section contains the award, expenditures, and drawdown for the current budget period, whereas the total period to date contains that same information for the award period, which in this case, as you see, it's for several years in, the higher amount. And if you click on one of those drawn figures, those are hyperlinks, and it will pull you up, it will give you this draw detail report. So this is something if your sponsor is saying, hey, how much have you drawn? Well, this is where you can know. It shows you all the draws that we've made on this budget and the date and the amount. So I mentioned an exception at the beginning to the rule that award amount does not equal cash received. The exception is what we call form of payment 11. These are awards where instead of GCA doing the invoicing, your department is doing the invoicing. Most of the time, this is clinical trials, also clinical studies and program income. These are cases where the award amount is variable based on the level of activity completed. It might be patients enrolled, samples analyzed, etc. And when you get the award agreement, it will probably look like it has the same kind of award amount as the more typical research award. Somewhere on there, it'll say 50,000. But it wouldn't be appropriate to treat that as the award amount, because if the actual activity were to fall short of the estimated figures, a deficit could result. So what we do with these is we establish them with an initial award amount of $0, which then increases as payments are received. Any questions?
There are no questions.
Okay.
All right. Hi, this is Liz. I'm going to talk about encumbrances. So lately, we've been receiving a lot of questions related to if we're able to adjust or liquidate certain encumbrances. And so while we do have the ability to adjust and liquidate certain encumbrances, not all of them are handled by our office. I'm just going to discuss a little bit more about the ones we are responsible for. So what is an encumbrance? Encumbrances are expenses that are predicted to be charged to the budget. Note that these are only for internal planning and monitoring, and they aren't reflected on invoices or reports that go out to the sponsor. All right, so where do these come from? Encumbrance data is pulled from Workday or the purchasing and accounting system known as PAS. PAS is a retired system, but GCA still uses it to enter encumbrance data. And next slide. All right, so the red boxes here, the top one in Grant Tracker, that shows you where your encumbrances are listed. And then down at the bottom for MyFD, if you wanted a more detailed breakdown by object code, you could get that in the encumbrance and open balances report. All right, so which encumbrances are handled by our office? We handle F&A, also known as indirect costs, the restricted funds, and subcontract F&A. In the second column, you'll see what you see in MyFD in the object code. So for the F&A and the subcontract F&A, these are both established when the budget is created. And these amounts, so for the indirect costs, it decreases automatically as charges post. And once the budget is in status 3, this will liquidate. For the subcontract F&A, these are reduced by GCA when we manually process the cost journal vouchers for your subcontracts. And once all of that has been met, we remove the encumbrance entirely. For restricted funds, these are entered at the full amount when the balance is carried forward over to the next budget period and can only be removed if the sponsor authorizes use of the prior year's funds in writing. So a little bit more about F&A and indirect costs. We are manually able to adjust these encumbrances in PAS, but we have noticed that sometimes we get a request to liquidate the IDC encumbrance, but the budget is still in status 1. And so what happens is the encumbrance will liquidate in the system that same day, but overnight it will reset itself and reappear the next day because that budget is still in status 1 and the system still thinks that the project isn't over and the indirect cost has not been met. So for these cases, we ask that you use the encumbrance hiding tool. There's a little checkbox in Grant Tracker and MyFD, which will temporarily remove that encumbrance. All right, so budget subcontract encumbrances. We receive a lot of questions about why is my BSC so high and can we remove them? The amounts are entered when the budget is established and reduced as GCA manually reconciles the F&A. One thing to mention is that budget subcontract encumbrances are carried over to the new budget numbers. So example, if you have a 4-year award with subcontracts and F&A is charged on the first $25,000 of the subcontract, If during the first year only $10,000 worth of charges were made, that BSC encumbrance will be carried over into the renewal budget. All right, next slide. All right, so this is just what I had mentioned earlier, those check boxes. If you uncheck them, that total will disappear, and it gives you kind of a little bit more of an accurate reading of what you have left. Okay, so this is not a complete list of encumbrances that aren't handled by GCA. These are just kind of the more popular items that we get. Salary and benefit encumbrances are updated twice per month at payroll. So if you have made changes in Workday and you aren't seeing them show up right away, you might need to just wait a little bit until the next payroll cycle. If they still haven't updated, we just recommend that you reach out to the ISC. Another request that we kind of get frequently is about open balances. So open balances aren't handled by GCA. Open balances such as BPOs and any ARIBA-related expenses are handled by the Procurement Services Office. So you can usually liquidate those online through their website, but if you have any other questions, definitely shoot them an email. This is just a link. It'll show a table with a more complete list and who to contact. Questions?
There are no questions in the chat.
Perfect. All right, so the next one I'm talking about is TransPaSu requests with mismatched F&A rates. Before I move on, there's a quick little fun fact about TransPaSu's. If you've ever wondered where that name came from, there is a reason behind it. It stands for transfer from parent to sub. We took the first few letters of each of those words and created TransPaSu. You are able to use TransPaSu to also change the PI and also transfer funds back to the parent from the sub. You might have also noticed that in our communications, we sometimes abbreviate that to TPU, so you'll see that as a TPU for the rest of my slides. So for this example, it has come up from the managers at GCA. They were noticing that during closeout, there were some sub-budgets that had different F&A rates from their parent budgets. This was causing issues during closeout because there was not enough indirect costs or sometimes too much being charged. But for this example, let's just say that the sub-budget was requested for 26%, but the award says it should be 55.5. When we set up the sub-budget and processed the TPU, we created the sub-budget with 26% as requested. The department starts spending and indirect cost is charged at the 26% rate. During closing, when we did our final IDC reconciliation, we find that the indirect cost is short due to the incorrect F&A rate. The 26% was not approved by the sponsor, and we should have been using that 55.5. So what this means at the end is that the award is spent and it results in a misadjustment for the UW. Our central offices rely on indirect costs to pay expenses, so misadjustments is really just missed money for central offices, and we don't want that. All right, so what is our role when we process these TPUs? On average, we get about 100 to 150 TPU requests each month, and we just really don't have the bandwidth to review all of the requests against the award documents, so we're really relying on you guys to closely review your award and make sure that the F&A rate on the TPU is accurate and allowable. That being said, we will most likely set up the sub-budget with whatever F&A rate you have requested, even if it is lower or higher than the parent. When we process TPUs, we are mainly looking at the budgeted allocations to make sure that the direct costs and indirect costs are lining up with the F&A rate on the form. We've recently been noticing that during closeout, this is like when we catch it, but luckily we now have the weekly auto IDC run, which should help us catch these before closeout, but we just want to maybe give a little reminder to always monitor your budgets closely, and if you see anything weird or you do think that the F&A rate should be updated, definitely reach out to us. All right, so how do we prevent this from happening and what are some best practices? When submitting your TPU, just be sure to review and make sure that the F&A rate is correct prior to submission. If you're unsure about it, we always recommend referring back to your award document. If we suspect that the F&A rate may be incorrect, we may return your request, which could put your request on hold. If you're adding funds to your sub-budget, please make sure that the direct costs and indirect costs match the F&A rate. If they don't match, the form will be rejected and it will need to be revised. This is also a good time to add in that supplements on gift budgets no longer need to go through GCA. You might have read this in our newsletter, but you're now able to supplement gift budgets using journal vouchers and MyFD. So to wrap this all up, sub-budgets are sometimes necessary and required for certain awards, but they are there to help you manage your funds. So unless the sponsor has approved multiple indirect cost rates for sub-budgets, you should usually have the sub-budget shouldn't increase or decrease the direct and indirect costs on your award. Questions?
No questions in the chat.
Perfect, thanks.
All right, so hello, I'm Austin, and I will be talking about invoicing, what to do, what not to do. Another invoicing topic. Yes, invoicing is a high volume process at GCA, and we get a ton of requests. And with invoicing, there are multiple pieces to the process. So we create the receivable, known as the invoice, and then we have to wait for the sponsor to issue the payment. And then once the payment is received, it has to match up with the receivable created in order for us to apply it to the budget. There's been a trend in mystery payments coming to GCA lately. By mystery, I mean that it doesn't align with the deliverables, payment schedule in the award, or the expenditures in our financial system. When this happens, additional time and effort is spent investigating the initial error and communicating with sometimes both the department and the sponsor to come up with a plan. All of this could be avoided. This indicates to the sponsor that the university as a whole cannot manage their award funds. So what to do? Well, what kind of drove me to talk about this today is that I've noticed a trend in what seems to be a misunderstanding of who should be submitting what when for the different billing types. So some example of billing types would be cost reimbursable, milestone, or what I'll refer to as other, which would be your form of payment 11 grants or contracts. The other would be budgets that GCA is not involved with the billing for. And while we include this information on the FA announcement, these details seem to be missed, or maybe award recipients are too familiar with one type of budget that they don't realize that there is a different billing process for another. So an example of this would be someone who deals mainly in clinical trials and they receive a new award. So they default to thinking that their department should be doing the invoicing. Fair enough, that's what they do with all of their clinical trial budgets. However, this new award is actually a cost reimbursable contract that GCA should be invoicing for. The department thinks it's okay to proceed with invoicing because they've asked GCA to stop and not issue invoices. Although that seems like it makes sense, it still doesn't change the budget's billing type. At the end of the day, it is still cost reimbursable, and GCA is still required to create receivables that match the actual expenditures, which would allow for the cash to be applied. If you aren't sure who's responsible for what, please ask. The sooner this is addressed, the better the experience for everyone involved. And there's a good chance that GCA is responsible for invoicing, although we may require additional information from your department. That being said, please help us by ensuring that any additional detail required is submitted in a timely manner. More what to do. So please take care of the invoicing process and the sponsor payments for your FOP 11 clinical trial budgets. And the same goes for the SCRI staff assignments. Those are also managed by your department. GCA's involvement in this process would be to apply the payments to the budgets when requested by your department. And for both of those situations, we frequently get requests to unapply and reapply funds to other budgets. And so I'd like to emphasize the importance of taking the time ahead of time to do a thorough reconciliation before sending the payment over to GCA with the budget number. If you typically drop off checks in person or mail them via campus mail, we have additional information on our website for our temporary process change. And this is because we're not able to go to campus right now and process them in person. So next slide. What not to do. Please don't invoice the sponsor when GCA is scheduled to. In the event of an overbilling, we cannot hang on to excess cash received, so we would have to refund the sponsor. And this is just another indication that we can't manage the award. If your budget is cost reimbursable, all invoices need to reflect costs that have actually posted to our financial system within the given billing period. If the expenditures billed don't match, we cannot create a receivable to apply the payment to the budget. And then this also leaves the sponsor thinking they paid for X when really what posted in our financial system was Y. So they're kind of confused what they paid for. It's easy. GCA should be generating invoices for cost reimbursable budgets. The sponsor may require additional information from your department, or maybe your department is responsible for submission, but these invoices need to match the actual expenses in MyFD. This way, they'll match the receivables that we can create. I've also noticed a trend in confusion around milestone-based awards and whether invoices can be submitted if there aren't any expenditures posted yet. So GCA would bill for milestones based on deliverables. We don't know to bill for these unless we're notified by your department. But typically the amount of actual expenditures posted to the budget would not impact whether we can invoice for these progress-related milestones. But like Michelle had kind of mentioned earlier, it is important to make sure that you are allocating those costs to these milestone budgets and not just trying to transfer a large surplus at the end of the project period. Some contracts might be a hybrid of cost reimbursable and milestone or patient care costs. And in this case, there would need to be a separate sub-budget for the different type of billing. So if you notice something like this might not be set up correctly, or you have any questions, please reach out to us as soon as possible so we can get it fixed if necessary. These can get really tricky to reconcile later down the road if like patient care costs have been commingled with cost reimbursable expenditures and if they've been billed in that way. Next. So a friendly reminder, we can't bill ahead and we can't go back after the fact to add recently posted transactions to an invoice from an earlier period. So if your sponsor wants to see something within a specific period, please try to get it posted in that period. Oftentimes this comes up with like subcontract or vendor charges, but I also see situations where there are expense transfers made to make corrections. It's important to stay on top of reconciling your awards so that these expenses are posted to the correct budget, or so that vendor invoices are received in a timely manner so that they can be paid and posted. It's also important to wait for the accounting month to close prior to invoicing for cost reimbursable awards. So expenditures for that month are not final until the month has closed in our system. So for example, even though April ended on the 30th, we couldn't invoice for April expenditures until after the month had closed on May 6th. If we don't wait, the billing period is thrown off in our system, sometimes resulting in invoicing periods that don't make sense or go backwards. Like one that shows up is, it would show like an invoicing period of May 1st to April 30th, which doesn't make any sense at all, but it's just a quirk of our system. So I say it's better if we can just avoid the situation altogether. Next slide. Well, what's the problem? Well, I mentioned one already, but including pending transactions on an interim invoice risks duplicate and incorrect charges on future invoices if everything doesn't end up posting as it was projected. Like I said, the billing periods can be thrown off, and sponsors often inquire about billing periods, and they can be pretty picky if there are like multiple invoices for the same month or if the billing period doesn't line up perfectly. And this ultimately leads to confusing the sponsor, a question of our credibility, and in some cases, a denial of payment. Next. But the sponsor requested it. Well, I think it's fair to say that our system does have limitations. I found it best to be upfront and explain the situation to the sponsor. A couple of options would be to offer an invoice covering multiple periods so that all of the required transactions can be captured. If the sponsor is looking for an estimate or an accrual, you could explain that creating an invoice early prior to our accounting month closing would not be an accurate representation. See if they'll accept something like a transaction summary or a budget summary from my FD instead. Or you can always reach out to us at GCA Help, and we'll be happy to work with them directly, work with you directly, work with everybody to try and come up with the solution. And so I think the moral of it all comes down to knowing your award. Study that, and if anything's unclear, please ask questions early on. We are all in this together, so we'll do our best to hold up our end of the bargain, but we do rely on your department to regularly review your awards and keep an eye out for anything that looks off. So if you have any questions, you can please ask now or reach out to us via email or grant tracker. No questions? Anybody?
No, yeah, no questions in the chat.
All right, so that concludes our forum. The next forum will be sometime this summer, maybe around August. I do want to remind everyone that we do have a fabulous GCA Forum webpage on our website, so you can check it out. We will have the recorded version of this presentation up soon, as well as a copy of the slides. If you need to contact us, Grant Tracker and email are your best friends. Hopefully, we've been able to answer your requests through those programs as fast as possible since we're all working from home. We unfortunately could not access the GCA helpline through our cell phones. So if you do need us to call you back, leave us a message at the GCA Help phone number, and we will then call you back on our cell phones. All right, thank you so much. Have a fabulous day, and we'll see you soon.
Thank you, everybody.